Morning everyone, and welcome to Tuesday, where we take a look at the performance of the NZSX 50 over the past week. Before I do that, just remember that I do this every week, but I have to. This is for educational purposes only. It's certainly just intended to help with your own share trading journey, and that it's not intended to be personalised financial advice. If you're looking for that, you do need to talk to your own advisor. If, however, you're looking for indicators to perhaps sort out the noise as to what shares I'm looking at on the New Zealand Stock Exchange, then come along and join my share trading signal service. It's free for the first 30 days. And I also love your feedback. So let me know if there is any shares that you'd like me to review for you, or if you've got any general questions as well around the share market, and I'll see if I can address these in one of these videos. I'm happy to help. So let's jump across. Right, so I've got up here the main board, so the main NZSX 50, so the top 50 companies trading on the New Zealand Stock Exchange. I've got this over the 5-year graph at this stage, and the market did come off a little bit last week, but there's sort of no surprises there because we've hit a high, excuse me, for the first time since basically around January 2022. So it's no surprise that sometimes when we see markets reach a high after sort of a good 2.5 years, or it's a little bit over that you do see sometimes some nervousness come into the market. And what happens there is people start getting a little bit worried. They start thinking that this could be a top and that the market could start to fall after that. Who really knows? Only time will tell. I'm certainly not in the game of speculating. And that's why when I do my own share trading, I use stop losses to ensure that I'm either protecting my capital, or when shares move into profit, that I am starting to protect not all of the profit, but certainly a good amount of it, especially as the shares move up in value. And that's something that I offer with the share trading signal service. So you can see here that yes, so the market came down a little bit. We've sort of, like I said, reached these highs of around the 12,800 point mark. And, the market could go a little bit range bound. Who really knows? The high that we have seen in the last 5 years was back in January 2021. So we're about 1,000 points off that. Let's go to the 2 years. Just have a look. So as you can see, it's been moving quite strongly. We'll put on the indicators. So we'll put on the moving average, on the 30 potential. And I've said this before, there's nothing magic about these numbers. They are just consistent with what I use. If you're going to use moving averages, one thing I would recommend is picking 2 moving averages that resonate with you and sticking to them. Obviously, the longer term or the wider they are, so I'm using a 30 and a 15, they are fairly much for shorter term moving averages, so they will react quite quickly. I do know of people that use longer moving averages, so for example the 150 period moving average, and again that's fine, that's perfectly fine. It's just what I would not do is chop and change, so use 30 one week and 50 the next, because then that's going to distort whatever it is that you're looking at with the markets. It's about being consistent, and then you can learn, and your methodology will, if you give it time, work, but it's where you chop and change and make different rules is where you get knocked out and you start losing direction, in my view. Okay, so as you can see here, the market is still trading above those moving averages. It appears when we look at the 15-week moving average that it could be hitting a little bit of a flat patch. That's sort of nothing surprising, because you can see that from July this year, we've had some pretty strong growth. Okay, there's been a couple of weeks, in fact, that the market has closed lower than it opened. That again doesn't concern me, because you can also see that the lows are getting higher, which is what we want. We want higher highs, higher lows, for obviously a market to continue in a good, strong direction. Another positive thing for me, if just looking down here, you can see I've got the ATR, which is the average true range. So that is an indicator that I use just to give an idea as to where the market is and how much volatility there is in the market. So in this example here, if I take that figure of 244 and divide it by the shares closing price of 12,050, that means we've got a volatility of just under 2%. So we've got a volatility of about 1.95%. 5%. To me, that's fine. I want to make sure that when I'm looking for new opportunities within the market, that we've got volatility under 5%. So that would be okay. On saying that, when I went through and just did my research over the weekend, there were none. There were no new opportunities for me to buy into. And I'm perfectly fine with that because I've got my rules. And it means that I do not have any emotional attachment at all into the markets. And to me, that is very, very important. It's about being able to methodically review my holdings, change any stop losses if it's relevant, or just leave them. And I don't have to be buying or selling just because I'm into share trading. Okay, I let my stops take me out of the market. I'm comfortable with where they're at. And just because I went through and did the review over the weekend to see what opportunities there were in the market and there weren't any, and again, I'm fine with that. I have absolutely no emotional attachment to the market. And that's something that you do have to learn if you're going to be a share trader. Because if you're going to get emotional attachment to any of your investments, then you are going to be in for one heck of a roller coaster ride. And that, in my view, is certainly not sustainable. So, yeah, the market, I mean, you can see there was quite a bit of volume on that sell-off last week. But again, I'm not too concerned about it. Hey, if it is a top, it is a top. If not, it could continue, because what you do sometimes see is when markets have reached a new high like that as well, they do sometimes tend to stall a little bit and will sometimes go through a flat period. And you can see that sort of through here at the beginning of the year. You can see that here on the 7th of January, it reached a high. It had a very, very strong run. Then we went through a flat patch. And it really didn't start breaking through that until July this year. So no surprises. And even if I go back further, you can see that this candle here back in March 23 was quite a strong one. We sort of had a little bit of an upswing, and then we went through a bit of a flat period. Of course, it came down again from about August 23, and then it's sort of our bottom, if you like, was October, end of October last year. Then we really saw some quite explosive growth, which is great. So for me, I'm not concerned at all about where the market is. Just because we had a sell-off last week, hey, it could be the start of something new, or we could just be going through a flat patch. Who knows? Only time will tell. So I hope that helps. And come on Thursday, I'm actually looking at Fonterra on Thursday and see what you think. And like I say, I love your comments, so just let me know if there is anything that I can review for you. Thanks.